on this MCLR. I have posted some videos earlier, but let us go through this. I would request Dave Benival to read this. What is MCLR? Are you
It is
seeing
not
on the
visible.
screen? Not visible. You tell me, Baba. Please read.
Marginal cost of fund-based lending rate, MCLR, is the minimum lending rate below which a bank is not permitted to lend. MCLR replaced
Sorry. MCLR replaced.
the earlier base rate system to determine the lending rates for for commercial banks.
Hmm.
RBI implemented MCLR on 1st April 2016 to determine rates of interest for loans. It is an integral reference rate for banks to determine the interest they can levy on loans. For this, they take into account the additional or incremental cost of arranging an additional rupee for a prospective buyer. The, the outcome of MCLR implementation. After the implementation of MCLR, the interest rates are determined as per the relative risk factor of individual customers. Previously, when RBI reduced the repo rate, banks took a long time to reflect it in the lending rates for the borrowers. Under the MCLR regime, banks must adjust their interest rates as soon as repo rates change. The implementation aims at improving the openness in the structure followed by the banks to calculate the interest rate or advances. It also ensures the prospect of bank credits at the interest that is true to the consumers as well as the banks. How to calculate MCLR? MCLR is calculated based on the loan tenor, that is, amount of time a borrower has to repay the loan. This tenor linked benchmark is internal in nature. The bank determines the actual lending rates by adding the elements spread to this tool. The banks then publish their MCLR after careful inspection. The same process applies for loans of different maturities, monthly or as per a pre-announced cycle. The four main elements of MCLR are made up of the following. Tenor premium. The cost of lending varies from the period of the loan. The higher the duration of the loan, the higher will be the risk. In order to cover the risk, the bank will shift the load to the borrowers by charging an amount in the form of a premium. This premium is known as the tenure premium. The marginal cost of funds. The marginal cost of funds is the average rate at which the deposits with similar maturities were raised during a specific period before the review date. This cost will reflect in the bank's books by outstanding balance. The marginal cost of funds has several components like the return on net worth and the marginal cost of borrowings. Marginal cost of borrowings takes up to 92%, while the return on net worth accounts for 8%. This 8% is equivalent to the risk of weighted assets as denoted by the tier 1 capital for banks. Operating cost. So can you, yeah. Operational expenses include the cost of raising funds, barring the costs recovered separately through service charges. It is therefore connected to providing the loan product as such. Negative carry on account of CRR. Negative carry on the CRR, which is cash reserve ratio, takes place when the return on the CRR balance is zero. Negative carry arises when the actual return is less than the cost of the funds. This will impact the mandatory statutory liquidity ratio balance (SLR) reserve every bank must maintain. It is accounted negatively as the bank cannot utilize the funds on to earn any income nor gain interests.
Read. Acha, I will ask Akash to read. Akash, please read. What is this? How MCLR is different from base rate? Please read.
MCLR is set by the banks on the basis of the structure and methodology followed. To summarize, borrowers can benefit from this change. MCLR is an improved version of the base rate. It is a risk-based approach to determine the final lending rate for borrowers. It considers unique factors like the marginal cost of funds instead of overall cost of funds. The marginal cost takes into account the repo rate, which did not form part of the base rate. When calculating MCLR, banks are required to incorporate all kinds of interest rates that they incur in mobilizing the funds. Earlier, the loan tenure was not taken into account when determining the base rate. In the case of MCLR, the banks are now required to include a tenure premium. This will allow banks to charge a higher rate of interest for loans with long-term horizons.
Please
Deadlines to
read.
disclose
Mm.
monthly MCLR. Banks have the liberty to make available all loan categories under fixed or floating interest rates. Additionally, banks need to follow specific deadlines to disclose the MCLR or internal benchmark. They could be 1 month, overnight MCLR, 3 months, 1 year, or any other maturity as the bank deems fit.
Acha. They are supposed to give 1 month MCLR, overnight MCLR, 3 months MCLR, 1 year or any other maturity MCLR. Good. But one thing I could now learn by going through this is through this MCLR methodology, the day our repo rate is getting revised, banks have to transfer this facility, advantage or negative, to the customers. That is what is
Yes, sir.
happening
Now,
nowadays.
RBI has revised this also. Now they have said that banks should choose one of the benchmark rates. They have given, I think, four
EBR, sir.
benchmark rates.
External benchmark lending rate.
What is that?
Yes,
What is
sir.
that?
EBR. Now current system is
External
of
benchmark
EBR, sir.
lending rates.
External benchmark lending rate. Is it so?
Yes, sir.
Yes, sir.
External benchmark lending rate. One more rate is coming. No, no, I'm not
Yes, sir.
getting.
MCLR is also old.
No, no. You tell what is the present one. Tell the terminology.
E
External
EBRR, sir.
benchmark
EB,
RR
EBRR.
or UBLR, sir. Anything you can say.
LR होगा sir.
External
Lending rate.
benchmark rate. It has come. External benchmark rate is a reference rate used by all Indian banks to determine the floating interest rate on various loans. External benchmark rate is mandatory to apply to personal loan, retail loans, and MSMEs. And money control is giving a detailed account about this. अरे बाबा इतना टिक करना है हम सबको टिकट टिक करना है money mark money control moneycontrol.com. No, it is not coming. It's not coming. Moneycontrol.com. What is external benchmark lending rate? They are talking as if it is there from since 2019. Arey Baba. So many things are
Yes, sir.
advantage for borrowers. Oh, oh. So many things are
Sir,
given.
according
I am
according to
giving the
this,
link.
bank should
Yeah, 1 minute. I am giving this link there. Now, what is it telling? Please tell us. Yeah.
bank should decide on lowest loan interest rate through linking them with one of the three external benchmark rates. And external benchmarks are repo rate, treasury bills interest rate, or the certificate of deposit interest rate.
Hello. Now, one happy news. You are allowed to
Yes, sir.
speak in Hindi.
In Karnataka bank interview.
Yeah. Just now, questions have come. I am loading it now. Just now, it is like break news.
breaking.
Just somebody has posted in our group. It is nothing secret. हमारा ग्रुप में कोई अच्छा लड़का ने पोस्ट किया है, इसीलिए उसको अभी आप लोग का साथ में हमने शेयर कर रहा हूँ. उसको हम लोग रेके कुछ डिस्कस करवाएंगे. This is happening in New Delhi.
Yes, sir.
And
There is a girl called
yeah, I
Nidhi
don't know boy or
who
girl. Karnataka.
interviews on Karnataka Bank Delhi
Sir, is
branch.
it advisable to conduct our interview in Hindi?
If you're for at least 40% candidates, they are not good in English.
Mhm.
So for them, this will be used. For example, Akash can speak very well. Dev can speak very well, but Avinash cannot do to that extent. And probably Piyush may be rated as 80 out of 100 if I give 100 to Dev. It depends. I'm talking openly. But then that will be of